Are still very shaky tonight, wondering what next week will bring with their investments.
Yes, we're covering the economy now, and here's how things finished up today. The Dow Jones Industrials average closed up 61 points after a volatile day where at one point the market was down 200 points. Of course, everyone is watching closely to see what will happen next after the Dow closed down more than 500 points yesterday. Certified public accountant Crystal Faulkner is live in the newsroom now. Crystal, what do you make of today's improvement, even though it's a slight one, on Wall Street?
Well, as you mentioned, Brendan, after some volatility today, the market ended up relatively flat, which is very good news given the big plunge that we all experienced yesterday. And you know, Wall Street breathed a sigh of relief this morning when the July employment report came out better than expected. Private businesses added 154,000 jobs in July, and that's compared to 80,000 in June. But what's interesting about that is that these jobs were added last month when businesses were so very uncertain about what the debt ceiling was going to be, and I think that's a good sign. Also, the unemployment rate ticked down to about 9.1%. Again, it's not great news. It's good news. It's better than we expected.
But here's the big question tonight, Crystal. What can we expect from the market going forward?
Well, you know, Brendan, until the European debt crisis is resolved, I think that we can expect more volatility. But the key here is to take the emotion out of the conversation, and investors should not let fear drive their investment decisions.
Yesterday, we even used the word panic, and that is the biggest threat to Wall Street. So what should investors do right now?
Well, it's a very good time to review your investment allocations. Make sure that your investments are in line with your overall financial plan based on your situation and where you are in life. And remember, you're generally investing for the long term, but if you have money in the market that you're going to need within the next year, you may want to reevaluate whether it makes sense to remove it so it's not subject to the volatility that we may still experience.
Crystal Faulkner, thanks as always for your sage advice.
You're welcome.